Awesome. Great. Welcome everybody. I'm just going to do a quick intro for everybody and then I'm going to let them kind of take it over. Welcome to this awesome event brought to you by the Hispanic Mortgage Lenders Association Organization. And Veronica, please take it from here.
Good deal. Good morning, HMLO friends and members. We're so excited to have everyone on board, and thank you so much for joining us. So we are right at 11:30. Let's get started. So welcome family and or members and friends. I'm always used to saying familia. Welcome to the Hispanic Mortgage Lenders Organization event. We are getting ready to start our engines and really plan for an incredible second half of the year. Let's stay positive. So the goal and the mission, I'll go over the mission and vision statement for HMLO, but our slogan is planning for tomorrow, taking action today. So let's move forward, start your engines, let's gear up. We're going to bring you some great content today. So who are we? The Hispanic Mortgage Lenders Organization is a nonprofit organization. We were founded in 2016. So we are still new. We're getting in the groove of things and going on a few years of being a nonprofit. We were founded by the incredible, loving Miss Olga Garza. So shout out to Olga. We love you. Moving forward, so our vision is to be the leader among mortgage lenders in helping the Hispanic community become homeowners. Our mission is to empower and educate potential homeowners in the Hispanic community with the necessary information and guidance to make positive decisions when purchasing a home. We believe this will result in sustainable homeownership everywhere. Our agenda for today, we're splitting it up into 3 parts. The first part is we wanted to share, the cool thing is you don't have to be Hispanic to join. You don't have to be Spanish speaking, but we do want to share why is it important to understand how to work with the Hispanic community. The second part is where we're going to spend most of our time today talking about down payment assistance and grant programs. And lastly, the common scenarios when working with the Hispanic community. We do have a chat box below for Q&A, so feel free to interact with us. Our sponsor, Jose Zavala, which I'll introduce shortly, will be monitoring that. So that way we're making sure to answer your questions throughout the process, throughout the session. So we cannot do this as a nonprofit. We don't make money. We cannot do things like this without sponsors. So today's session, Start Your Engines, has been brought to you by Jose Zavala, the owner and CEO of ZTX Advisors. Part of their goal and their mission is to help real estate professionals save money on taxes, automate their business, and save effectively. So let me hand it over to Jose Zavala. Take it away.
Awesome, Veronica. Thank you so much. Hey guys, thanks for coming. I really do appreciate it. Thank you for HMLO for letting me be a part of this. You guys are a great organization. Love what you guys are about. If you have any questions, Q&A guys, or in the chat function, like Veronica said, we'll be keeping an eye out there and we'll make sure to get as many answered as possible. But a little bit about me, ZTX Advisors. We are a business consulting firms. We specialize in tax, bookkeeping, payroll, things like that, but we also do strategy and business growth. So helping you, making sure you understand your numbers, understand where you're at, and if you're not growing, why you're not growing. And so we're not just in our biggest verticals that we love to work with are real estate agents and business coaches, because a lot of you guys usually tend to make a lot of money, minimum expenses sometimes, and so you always have big tax bills. So for us, what we like to do is tax planning. That's kind of where we come in and we can make sure that you make your money work for you. So that's a little bit about us, what we do and how we operate. I am actually the 2020 NAREP Houston treasurer. Wow, I'm getting ahead of myself there. Maybe one day, maybe a little bit of aspirations there, but yeah, like I said, I'm really, really excited and really happy to be a part of this. And I love anybody. My big passion is helping the Hispanic community. So anybody that's doing that, which is what you guys are doing, is amazing. So thank you for having me.
Awesome. Thank you so much, Jose. It's been such a pleasure to serve alongside you on the NAHREP Houston board. And hey, NAHREP Houston president sounds really good. So keep working. That you're gonna it's gonna be no time before you're there. So moving forward, we thought it would be really important to share why is it important to understand how to work with the Hispanic community. We are a Hispanic-based organization. You do not have to be Spanish speaking. You do not have to be bilingual. You don't have to be Hispanic or Latin to join our organization. We wanted to bring this information to you to really share why is it important, okay? It's not just Houston that is growing national, or it's not just Houston that's growing, but the Hispanic community across the nation is growing. So the information that we're bringing to you in this segment is brought to you by NAHREP. NAHREP is the National Association of Hispanic Real Estate Professionals, an organization that we love and support. I am current past president for NAHREP Houston, and NAHREP has put out the State of Hispanic Homeownership Report for about 10 years now. This report was just released just a couple of weeks ago, so it's hot off the press, and we wanted to bring this information to you. So why is it important? So from a national perspective, here's a couple of stats, okay? The numbers don't lie. The proof is really in the numbers, okay? This is why it's important to understand how to work with Hispanics. So the Hispanic homeownership rate has increased in the last 5 years. So in 2019, the rate of increase for Hispanic homeownership was at 47.5%. As you can see, between 2015 and 2019, there's been a constant increase in Hispanic homeownership. Hispanics are the only demographic that have increased in homeownership every single year. So our Hispanic households are in home ownership is growing. Also, more than 60% of Latinos are millennials or younger. When you look at the millennial generation, that's Gen Z is over 22 million and millennials are 15 million. So we are a young, vibrant community, and guess what? They're going to need houses now, today, and tomorrow, and very soon. In 2018, there were 4.9 million mortgage-ready Hispanic millennials in the U.S. Make sure that, guys, we're in the business of helping people. We're also in the business of helping our families, and this is how we provide for our families. There is no shame in making money and helping people when we're doing it the right way. So there is a huge population out there that is mortgage ready that need to find homes, and why not us? We are here to help them become homeowners. At this point, I'd like to transition over to Josie Anderson. And I'm sorry, I don't think I did an introduction. I'm the current 2020 HMLO president. It's been such an honor to serve so far. We're in this new world, and this is our first time doing a virtual event. So thank you for your grace. Josie, I'm going to transition over to you. Josie is our 2020 vice president and our incoming president for HMLO. Josie, take it away.
Thank you, Veronica. I appreciate it. Veronica has given me the honor of giving you guys some great information. As you can see, Texas has 57.26 Hispanic homeowners. Guys, that is huge. Please look at your Hispanics. Go after them. They're ready to buy. They have money, guys. So please. But the exciting news that I wanted to bring to you today is, as you can see here, Texas came in #1 and #2 on the State of Hispanic Home Ownership Report in the market. So as you can see, Texas is killing it, guys. We are absolutely killing it. So please go after those Hispanics. Don't turn the cheek, because they are ready to buy. So Vero, thank you so much for giving me the opportunity to introduce that Texas is #1 and #2 in the State of Hispanic Homeownership Report.
And not just Texas, but Houston right there is #1.
Exactly. Houston #1 and Dallas #2. You know, everything's better in Houston. So hey, I'm sure we have some Dallas folks that may disagree with that. With that being said, Veronica, I did want to transition over to our speakers. Is Omar on with us? Was he able to join us? If not, I can go on to our second speaker.
I can talk about the city program.
I'm sorry?
I can talk about the City of Houston program.
Thank you, Veronica. I appreciate it.
Awesome. So unfortunately, one of our board members couldn't make it on time. It's okay. I know we all have, other things that just kind of jump up at the last minute, and that's okay. So what we wanted to go over during this session is talking about down payment assistance programs. The City of Houston Down Payment Assistance Program is one of, it's an incredible program that's been out for years and years and years. So the hat that I'm wearing oftentimes is changing, right? So let me put my loan officer hat on. And from a loan officer perspective, let me share how the City of Houston program works. So the City of Houston is currently offering $30,000 in down payment assistance and grant programs. In grant funds, excuse me. And to get more information, we have included the website down below of for each program that we're going to talk about. So the City of Houston, the pool of funds that they're currently working with was actually received because Houston was impacted by Hurricane Harvey. So the actual technical name of the program right now is the Harvey Homebuyer Assistance Program. The amount is $30,000. Let's look below on the bottom right-hand corner, the sample income limits, okay? So under the old program, for a one-person household, you could not earn more than $44,150 and be able to qualify. So if you earned $44,200, you overqualified for the program. Now, they recently made a change, and we were all really excited to hear about this change. And it was in the works for a few months, and when it was finally released, all the loan officers and realtors who have worked with this program before were just jumping for joy. We were so excited. Why? Because the median income for the program income limits has now increased. So instead of having to stay with a income limit for, let's say at a typical three-person household, instead of $56,750, for three people, you can now earn up to $85,100 and still not overqualify. One of the really important details about the program, we want to make sure that we mention it, is that because the program, the funds came through the Hurricane Harvey recovery efforts, one of the rules is that you had to have lived somewhere that paid taxes to the City of Houston on August 2015 of 2017. So whether you were renting or you owned a property at that time and were displaced because of Hurricane Harvey, then as long as you lived somewhere that paid taxes to the City of Houston and you are under these income, limits, then you can qualify or apply for the City of Houston funds. They do ask you to take a homebuyer education course. The really cool thing is right now, since we can't do much in person, there's actually an online course which we can post to our website or to our Facebook page later this afternoon. And as long as the house pays taxes to the City of Houston, you're under those income limits, and you take a homebuyer education course that is supported by the City of Houston, hey, apply for these funds. They're out there and they're real and they're working.
Thank you, Veronica. I appreciate it. Jose, do we have any questions for Veronica on the City of Houston?
So yes, we have one from Frank. So you had to be impacted by Harvey?
Great question. So if you were a homeowner on the date of when Hurricane Harvey hit, and if you were displaced, then that would qualify you for being able to apply. But if you were renting at the time of Hurricane Harvey, and it's okay, hopefully you were not impacted. Hopefully you were not displaced because of Hurricane Harvey, even as a renter, you can still apply for the program. So it's just if you were a homeowner and you were displaced because of Harvey, then you can also apply. So it's not necessarily for a first-time home buyer.
Okay, that was the only question we had.
Thank you, Veronica. So we'll move on to our next speaker. Our next speaker is Elizabeth Rubio. She's a branch manager with AMCAP with 18 plus years in the finance industry, helping families achieve the American dream. And Elizabeth is going to be talking to us about the SETH program. Thank you, Elizabeth.
Good morning, everyone. Well, I want to share with you the benefits of getting down payment assistance. This is available through Seth. Seth has two different programs. One is the Gold Star, which allows from 3 to 7%, and that can help buyers not only with the down payment assistance, but also closing costs. And here's another benefit of it. The FICO score can be as low as 620. One of the other great things about this program is that it's not payable back. So if they keep the house, if the buyer keeps the house, lives in the house from 7 to 10 years, there's no money to be paid back. So it's a grant, it's free money that they can qualify for. This type of programs qualify for FHA, VA, USDA, and conventional loans. So it's for all the programs that are available that you can apply this additional down payment assistance as well as closing cost. Another program, part of the Seth, it's also the 5-star. On this one, you don't have to be a first-time home buyer. So if you own a house, you sold it, you can apply for the down payment assistance. The minimum FICO score on that is 640. So it's a little bit higher. And the maximum that you can get on down payment for this different type of down payment assistance within Seth is up to 4%, in some cases 5%. And there are income limitations, so it just varies depending on the county where you're looking to buy. If you have any questions in reference to that, you can always send us an email and we can respond to that. You can also add MCC. MCC stands for Mortgage Credit Certificate. That is a tax credit that you get directly from the taxes that you pay. So sometimes this can be added as part of your income. So if you have a borrower that is very borderline, you can add the MCC, and that adds an additional $166 as an income credit. So it's got great benefits to work with down payment assistance. They're very easy to deal with. 30 days, you can close a deal within 30 days using down payment assistance. There are many benefits to this. Another one of this is that the MCC is good for the life of the loan. Meaning, so as long as you have that mortgage, if you decide to live there for 10, 15 years, or the whole 30 years, who knows, you get to keep that credit for the life of the loan. If you have any questions, reach out to us and we'll be more than glad to respond to your doubts.
Thank you, Elizabeth. We appreciate that. Jose, do we have any questions for Elizabeth?
We had a question come in. I don't know if it's necessarily for Elizabeth, but Maria already went ahead and answered it, but I want to go ahead and let everybody see it. For the city program, how long must you live in the home? And then the answer looks like Maria was 5 years, correct?
Mm-hmm.
Okay.
Okay.
And so far, that's all we have right now. Mm-hmm.
Okay, thank you, Jose. So we'll move on to our next speaker, which is Veronica Martinez. She is the VP of Mortgage Lending for Guaranteed Rate. And Veronica is going to talk about IDAs.
Awesome. So thank you, Josie. So the IDA program is called an Individual Development Account, also known as a matched savings. So for our families that are, we're in the business of building a pipeline, right? Some families are ready right now to purchase. Some families aren't going to be ready until maybe later this year or maybe next year. Part of maybe they're looking to they're needing to build their credit or restore their credit or save money. Or maybe they've been furloughed and they need a little bit of time to get back into work and get kind of back into the groove of things. So what I love about the IDA account is that it is a match savings. So the way it works is when your family qualifies based on these income limits, so we're including the match savings income limits. Now these are for 2019. They may be updated by now for 2020. So just make sure that you're constantly, keeping up to speed with the income limits because they are subject to change throughout the year or once a year, excuse me. For a family, let's say for a family of 4, if you're a family of 4 and you earn no more than $61,050 for the year, then you would qualify for this type of program. And the way it works is you are given a minimum of 6 months up to 3 years to be able to save up to $2,000. And the IDA program, the organization that I refer to is called Covenant Capital, Covenant Community Capital. And the way it is the family goes and they set an appointment with them. They bring their paperwork, and once they're approved for the program, then the IDA organization will open up a no-cost savings where the family would then be able to save monthly. Again, they have it has to be a minimum of 6 months, and they have up to 3 years to use these funds. So let's look at a situation. Let's say they qualified and they opened up their account in June. Well, 6 months later, we're looking about November, December timeframe. Well, let's say at that point in time they're ready to apply and they are able to get into a house. Well, they not only have the $2,000 that they personally saved up, but then the IDA program will match them dollar for dollar. Sometimes it's 2 for 1. So sometimes they'll actually get $4,000 for having saved $2,000. So that total that they have set aside is anywhere between $4,000 to $6,000 to help them become a homeowner. That money, because it is because part of it's in a savings account, then they can use those funds for their inspections, for their earnest money, for their appraisal deposit. Oftentimes for our lower income families, that's a lot of money. $2,000 is a lot of money to save up. So when you can take that and you can double my savings, there is no investment CD out there that's going to give me that type of return on my savings. The other part, which is the $2,000 or the $4,000, whatever IDA is matching at the time, it's simply considered a gift. So the way it works is you can actually stack it on top of the City of Houston. You can stack it on top of the SEF program. You can stack it on top of the MCC program. So yes, your families actually can benefit from multiple programs at the same time. So that's how the IDA program works. And I just wanted to give, just a quick overview.
Well, Veronica, great information. You guys are just full of information today, and I know that our viewers are absolutely loving this. So, Jose, do we have any questions for Veronica?
Yes, we do. We've got 2 questions. And so, are DPA still available, and have the FICO scores increased or changed? That was one of the questions, and I don't think this is related exactly to the IDA, but I know this question came in.
Elizabeth, do you want to answer that one?
Yes. So the FICO scores right now are still kind of low. So it just depends on the lender. Different lenders have different requirements for FICO scores, but down payment assistance is still available.
Okay. And then to add to that, how tight are the guidelines now?
Well, the DTI has decreased a little bit, but it's just due to COVID-19. I'm sure that as soon as I would assume that by the end of the month, they should be starting to release a little bit or be more flexible on all the restrictions that they have applied currently.
Okay. All righty. That looks like all the questions we have so far coming in.
Okay. Thank you, Jose. So we'll just truck right along. We'll go on to our next speaker. Our next speaker is Maria Bonilla. She is a real estate agent specializing in first-time homebuyers with down payment assistance. So Maria, take it away.
Thanks. So to one of those questions that we're asking about down payment assistance, we want to make sure it was for like Seth and T-Shack. City of Houston does not have a credit score guideline for the $30,000 as long as the lender approves them. So if there's a lender that does down payment assistance with the 580, they'll take that 580. They just can't have, judgments, tax liens, delinquent collections with utility bills. So it's a little bit intel, but no credit score on those. As Josie mentioned, I am a down payment assistance agent. I love working with first-time home buyers. I love the feel of everybody getting some free money. I like to work with several builders. A lot of builders do accept it. The big thing that as realtors we make the mistake is not letting the builder know what program our clients are wanting to apply. For down payment assistance from the city, 2 great builders that I love to work with is Colina Homes. They build very affordable homes. Lorraine is one of the girls that I call her my expert on it. There's several, communities. She's in Avalon, Avondale and South Meadows in Southwest areas. So definitely we can share that information for that. But letting them know the fact that it is a down payment assistance, there's a specific document that the city requires. That is the reason why you have to disclose it. So we work along with these great builders. Another one, it is K. Hovenian, very affordable prices in the North Side area. So just be honest, let them know it is really easy to do the down payment assistance. It takes time, but keep in mind, if you start right away, you apply for the program while the house is being built, everything falls into place. You know, you just work as a team and clients will love it and they'll refer you more and more and more. Because I mean, you're making their monthly payment extremely affordable with these down payment assistance. And some of the incentives that the builders have, you know, for closing costs and upgrades, you can even bundle that with everything else that you're getting. So imagine all the programs what Veronica mentioned, you know, IDA, City of Houston, then builder incentives. That's an amazing, amazing deal for them. So definitely reach out to builders. It's not impossible. That myth about, you know, don't do down payment assistance because they never close. It's a false statement. I close all day long with them.
That's very true. Maria does close at the City of Houston all the time. She will put her boxing gloves on and go down and fight for you to get your money.
Yeah.
Veronica's laughing because she knows it's true. So Maria will definitely fight for you. Jose, does Maria have any questions?
Yes, we actually have a few. We got one from Jerry. Who is the go-to lender for the programs being discussed?
The City of Houston down payment, I mean, I know Elizabeth does it. I know Veronica does it. I've done plenty with Veronica. And, you know, throughout her years, Amity Bank with Omar does it. I am a very strong believer that, you know, finding the lender, and we can definitely put a whole list out there, which there are tons of them, but, you know, they all have great, great programs. You know, just make it fit with the lender, you know, kind of before anything, just let the lender know, like, hey, my client has a 620 credit score or this credit score, or my client has these collections. Do they have to pay them off? Because certain lenders make you pay off, you know, collections over $1,000. You know, that's not a city requirement. That's a lender requirement. So kind of screen them and question, you know, how many down payment assistance of City of Houston have they done? And that kind of gives you an idea if you're rolling with the big dogs.
Yeah. And if I may,
go ahead.
If I may add, I'm human, guys. Something I failed to mention is that our speakers for today is actually the board of directors for HMLO. We're made up mostly of mortgage lenders because we are a lender-based organization, but we do have, you know, other board members that are real estate professionals, title professionals, credit restoration, and so it's important that we mention, right, you know, that we share that we are not here to promote ourselves. We're here to provide content to our members and our followers and our supporters. So what I would like to do is something that we were working on. We've had to kind of pivot, right? Everyone has had to pivot right now because of, you know, COVID-19. But something that we were working on before is building our membership list for the year before all this started happening in March. So one of our goals was to one of the things that we do as a nonprofit is we literally go out into the community, and we educate. So we do home buyer education events, and what we were planning to do is to provide a list of all the lenders and the realtors and anyone that has signed up as a member with HMLO, which Josie will talk about a little bit later. But to include that list, to make sure that we're promoting our members, folks that are paying to be a part of our organization. What I think we can quickly do is, you know, I'm here to provide, as a leader, is to provide solutions, is all of our current paid members. I commit to putting that information at least on a Google sheet and uploading that to our website and uploading that to our social media. So that way, folks that are on this, especially agents that are looking for qualified lenders, that we are promoting our members. But just like Maria said, just make sure you're asking the lender, do you do down payment assistance? Are you familiar with, you know, with the programs? Are you approved to do it? So that's something as the organization's president that I commit to doing.
Thank you, Veronica. Thank you for that. Jose, do you have any questions that are?
Yeah, we've got another one. Is there a list of the builders? Do we have a list of the builders, and then do builders like KB accept? So that's going to be kind of two of the similar questions.
So KB does accept the down payment assistance program, not through their lenders. So you may lose incentives from them, but I mean, you got to balance it out. KB right now, to my knowledge, it has building a lot in the Harris County down payment assistance areas, like Haiti, Cypress, Tomball. So those areas do apply. It's not the city of Houston. It's a different program. We can, like Veronica say, share that information as well in regards to it. But yes, the answer is yes, KB does do it. And there are plenty of builders that do it, to be very honest.
Okay. And then how long does it last once you applied, or how long do you have to find a house?
To apply, right now the city of Houston's backed up about 2 months on the application. So I'm always telling everybody to apply now and prepare as it goes along. It takes about usually, and this is because we're going through the whole virus thing, but usually it's about a month to submit your application. So it's great when the builders are building your home. And it is valid for 3 months. So the city doesn't keep on asking you documents, kind of like the lender. It's a valid 3 months award letter. If extends from the 3 months, as you know, they will just ask for pay stubs and back statements just to make sure that everything stays the same.
Okay. Awesome. And I think that's everything so far. Thank you.
Thank you, Jose.
Mm-hmm.
So our next speaker, on to our next speaker. Last but not least, we have Vanessa Hernandez, who is the community liaison for White Picket Realty. And she's going to give us some common scenarios that lenders, realtors, everyone ask out there. So Vanessa, take it away.
Well, thank you for the intro, Josie. And yes, as you said, so I work at a real estate brokerage, and we get so many questions from realtors, and just being able to connect with HMLO has brought so many solutions to the questions that they had, and so that's really what I want to discuss with you guys is these commonly asked questions or scenarios. And if I could start with Elizabeth, I have a question for you, Elizabeth. Can you give us an example of a self-employed applicant in a common scenario you see with self-employed borrowers?
Yes, of course. Thank you, Vanessa. So a self-employed person is a person that works as a contractor, so for himself or herself, and it's a sole proprietor. So one of the scenarios that we see a lot is when they were previously working for a company. They were employed by a certain company. They had been working there, and all of a sudden they had been doing the trade for so many years that they decided to open their own company. So they file every year as a W-2 wage earner. They get a W-2 form at the end of each year. So the following year, they decide they want to go ahead and open their own company. So they structure that up, they start working, they get paid now with a 1099, meaning they don't get any taxes deducted from the income they receive. They file at the end of the year, so now they're filing as self-employed. So they have 1 year as W-2, the second year would be a 1099 or self-employed income. So what we do is that we average that income as self-employed for 12 months, and that's the net income is the amount that all lenders use to qualify the borrower. One of the things that we must keep in mind is that the income we use is the net income, not the gross amount. So it's the income after all deductions are taken out. Because a lot of people get confused. They say, well, I made $100,000 last year, and they grab the gross amount. They're not considering the amount after deductions, and that's what lenders grab, the amount that you're paying taxes on. So that's how it works for a self-employed person. However, if they have a W-2 1 year and the following year they declare self-employed, that will meet the requirement for the 2 years of employment. So that should be able to work just fine.
Gotcha. How about someone that is just self-employed and doesn't have a W-2 from any past job?
As long as they've been employed for 2 years, 2 consecutive years, we would be able to, or the lender would be able to grab that net income for the past 2 years and average it over the past 24 months. And that would be the income that we use.
Beautiful. Thank you for the information. And I know we had a question for Omar, but Veronica, do you want to take this one?
Sure,
So the
happy to.
question is, what's a great way to prepare for a potential home buyer who may have who has cash assets but not a deposit in their institution? So pretty much some cash under the mattress.
Absolutely. So, and we actually do see that it's very common. Spoke to two families yesterday. I'm a loan officer. I spoke to two families yesterday and had that scenario come up. And so, gratefully they were in the kind of the planning stage. So there's two ways to look at it. If they're in the planning stage of, maybe buying later this summer or buying later this year, I always share with them, make sure that money is in a bank. We cannot use cash as income, or excuse me, as proof of funds available to buy your home, because we don't know where the cash came from. We can't source it. So what we usually ask them to do is to deposit the cash into a bank account as long as they're looking to purchase at least 60 days out. Because what's going to happen is when they apply as a lender, we're going to ask for the last 2 months of bank statements, and we're going to look at that activity, the deposits, the withdrawals, transfers, all of it. We've got to get really nosy because they're not just buying a car; they're buying a home. They're asking for upwards of $100 to $200 to $300,000 to borrow. So if they're kind of in the planning stages, make sure that they, deposit those funds into a bank account. Also, if they're kind of maybe closer than 60 days to buying a home, then I usually tell my borrowers, use your cash to pay for your expenses and leave your direct deposits. Oftentimes they get direct deposits or they get checks that they deposit. Now direct deposits is more common, but I ask them to, leave your direct deposits there and use your cash to kind of for your everyday expenses, because we're going to be able to source through from now until closing. Your funds are coming from your direct deposit. Another option is they can always, get a gift from a family member if needed. And oftentimes what lenders are going to ask for is we'll ask for the proof of withdrawal from the donor's bank statement and a copy of a gift letter. So there's definitely ways around it. When they have cash saved at home and I'm taking their application, I'm like, please don't tell me you have cash. I usually ask them, do you have funds, set aside for closing that are not currently in a bank account, in your primary bank account? If they say yes, then I can read between the lines. I just don't want that liability, but there's definitely ways around it. Absolutely.
Awesome. Thank you for the knowledge. And with the gift that you mentioned, is there a limit to that gift?
Typically, there is not. Sometimes depending on the rules of the loan, the type of loan that we're going with, and if they're going to use other grant programs, sometimes they are limited to not being able to use gift funds towards closing. But oftentimes the gifts are unlimited.
Awesome. Thank you. And let's go back to Elizabeth. Elizabeth, how important is credit? I mean, like the credit score and the actual history of credit.
Yeah, credit is probably one of the biggest factors in getting a loan approval or pre-qualification, even to start with that. So the credit it's a history of payment. So lenders want to see how is it that Vanessa has made payments for the past 2 years. Has she been on time? Has she been late? Has she paid her student loans on time? So in order for them to release those kind of funds and say, yeah, this is a person that I'm willing to loan money to for your biggest investment, which tends to be our house, we want to see some kind of history. How has it been paid in the past 2 years? If there's not enough history, sometimes a lender, to limit the risk, they might ask for a verification of rent. They'll call the landlord and find out how has Vanessa been paying the rent for the past 12 months. Has she been late? Is she always on time? They just want to get a little bit more. Another thing that a lender might ask for is some kind of reserves, at least 3 months in your bank account. That amount is not going to be touched. They just want to make sure that you still have a little cushion there, just in case things happen in life. They want to make sure that they have those 3 months of rent or mortgage. Mortgage payment sitting in the bank, just to make sure that the monthly mortgage payment is going to be done. So credit is by far one of the most important factors when looking into a mortgage application. So I recommend that anybody looking to start thinking about buying a house should start preparing. Get with a loan officer, find out what your credit is like. Is there anything that you can do to increase your FICO score? So if you have a 700 FICO score, you might get a better interest rate versus if you have a 600. So it's always better to, look into it, start preparing, see if there's any collections that maybe you were not even aware that existed on your credit report. Maybe you can pay it off and get the advice. Get the advice. There's plenty of us out there that are willing to walk you through the whole process.
Yeah, by what I hear is that it's key for the realtor to have open communication with the lender about their clients and see what their clients are working with and see what options there are. This is for you, Veronica. So sometimes we're just so close to debt to income ratios and need some breathing room. What are some solutions you suggest?
Absolutely. So, one of the normally one of the quickest ways to tackle it is usually asking for maybe, to get their insurance premium lowered. I personally am not a really big fan of that. And the reason why is because if we're asking to lower their premium on their insurance, and oftentimes that comes at the expense or the sacrifice of also, reducing their coverage. So I don't normally like to tackle that, debt to income ratio hurdle, the obstacle by asking for lower insurance. One of the solutions that loan officers have in our toolbox is just like, Elizabeth briefly mentioned the program earlier, the MCC program, the Mortgage Credit Certificate. Oftentimes the MCC program, you can earn up to 75, 85,000, depending on your household size. And the MCC program, because it is a dollar for dollar tax credit, that actually allows a loan officer to add additional income to the application. So if the estimated tax credit is going to be $2,000, and get with the loan officer, we'll show you how we do that calculation. But of course, that's for us to worry about as far as the calculation. But if it's going to be $2,000, we can add an additional, $183 to the application, almost $200 in additional monthly income. Especially for lower to moderate income families, that can make or break the deal. I have had many families, I've been going at this for 15 years, and MCC has saved a lot of the loans, because it'll sometimes bring the debt to income ratio from 47% maybe down to 45%. And yes, it can make that much of a difference. So let's kind of get away from that, asking for lower insurance premiums. Let's look at other solutions that are actually going to benefit the family through solutions like the MCC program, the Mortgage Credit Certificate. And the cool thing about the MCC program, the reason why we're giving them that additional monies on the application, is because really, as long as they owe a mortgage, they can benefit from the tax credit program for the life of the loan. So as long as they're paying mortgage interest, they're getting that tax credit. So it's the gift that keeps on giving.
Awesome. I think we have a question from Frank Ramirez. It says, if you have someone say, I have no debt, no credit in their name, can they still buy a house?
I can go ahead and answer that, Veronica. A borrower can't purchase a house. We can also build, or loan officers can also build what it's called a non-traditional credit. Non-traditional credit is when they have insurance, any kind of utility bill, they have been paying on time for the past 12 months. As long as they have 3 utility bills to their name, they have been paying on time, and they can prove that that amount has been coming out of their bank every single month, then we can build a non-traditional credit, and some lenders can go that route. So yes, they can still purchase a house even if they have no credit. But like I said again, if they're looking to purchase in the next 2 months, 3 months, start preparing now. Open a secure credit card. There are many ways of establishing your credit. If they go and open a secure credit card within 60 days, they should have a FICO score. That's the only thing that lenders are looking at. How are you making your payments? But yes, there are ways to build the non-traditional credit if they happen not to have any kind of credit cards.
Thank you for that answer. And now, Elizabeth, now that I'm with you, can you discuss multiple household income sources?
Yes, definitely. So what happens is, especially with the Hispanic families, we know how it is. We have aunts, cousins, daughters, sons that live with us. So if you have your father and your mom that live and work with you, they have credit, they're looking to purchase a house, and you want to contribute as someone that lives in the household. As long as you have 2 years of tax returns, you have filed for 2 years, you're currently employed, so you're getting some type of income, and you have established credit, you can be the perfect person to help your parents get into a bigger home by contributing your income and your credit and being part of the loan. So yes, there is a way to do that. And just to go a little bit further, what's income? It's not only the income when you work for an employer. It can also be child support. It can be oh my God, I just went blank. So there's many types of income. So child support, wage earners,
Social Security and
Social
disability.
Security, disability. Thank you, Veronica, for jumping in. My God, I just went blank. What is income? So there you go. Those are the types of income.
Well, so it seems like there's a lot of options out there. So get your clients pre-approved, guys.
Yeah.
Absolutely. Vanessa, thank you so much. You did such a great job. Thank you, Veronica and Elizabeth, for taking those scenarios on. That was also wonderful. Veronica, would you like to take us into the next segment?
Yeah, absolutely. So we had budgeted for 5 minutes for our closing, but we actually have a few extra minutes. So we wanted to make sure we had enough time for each presenter to go through. So we do have time for Q&A, and I would like to pass it back to Jose so that he can go through the Q&A for us. But team friends, you have over 150 years of experience right now on this panel with the board of directors. So those that are still with us, please ask us questions. We are here to be a resource. We have loan officers, realtors, we have a title person. Hey, we got a tax person. I'm just going to throw that out there. So ask us away. We're here to be a resource. What questions can we answer? We do have time for a few questions.
I think right now we don't have any. Let me go see if I can find some online for our lives real quick. But while we're waiting on a couple of questions, I just wanted to hop in and for those of you guys that registered as attendees for the webinar, we actually have an ebook that we have on 7 tips to help real estate professionals save some money on their taxes. And so we're going to share that link with you guys as well and then we're also taking this recording, we're going to put it on YouTube and share that with you, everybody that registered as well, as part of a thank you for coming on. So you'll have access to that and the YouTube as well. So I just wanted to
Wow.
let you guys know.
That's phenomenal. While you're going into our Facebook, our social, the different lives that are out there streaming, I wanted to add the reason we titled this event Start Your Engines is because, and this is, talk about a great week. We planned this like in advance, right? But we wanted to give the opportunity to give you a rolling start. So we actually, during our board meeting, our brainstorming session, we were trying to figure out what content to bring you. The analogy came up of a race car. Race cars don't just go from 0 to 100. If they do, they'll burn out their engines, they burn out their tires. If you watch the Daytona, I think it's Daytona 500, they get a rolling start. And then so they're on the trail, the road or whatever, on the track. Thank you. So they're on the track and they get this rolling start. They're warming up, right? They've trained for this. They have practiced. They have done everything. They have studied their competitors. They've studied the race and what obstacles could come up. Sorry, my dog's asking for me to let him outside. Talk about being normal, right? We're at home. So anyhow, this is a great opportunity to give yourself a rolling start. Businesses have started opening. we, as a community, we're starting to wake up again and starting to get back into whatever this new norm is going to be after the coronavirus. So that's why we wanted to bring this to you, is to give you real tools to help you to get a rolling start back into what is going to be one of the best real estate markets in years. We are going to be so busy. Loan officers, you know, Elizabeth and I and other loan officers, we're not just busy with refinancing. We're busy with families that are looking to buy. And it's not just, and it's not, you know, when you look at Hispanic, when you look at my pipeline, it's like Ramirez, Gomez, Gonzalez, Flores. And the thing is, not even 20% of those are Spanish speaking. I can tell you from firsthand experience right now, my pipeline, the average home buyer is a millennial couple. They're dual income, no kids. They call them dinks. Dual income, no kids that have been saving and living and sacrifice living at home so that they can save up. And guess what? They have money set aside to get into their home. So the reality is that the market is moving, and we just wanted to bring you tools to help you get ready, because this is like a slingshot. We have been pulled back temporarily, but we're about to be catapulted into this new market, and we're about to have a lot of fun. So any questions, Jose?
Yes, we've got a couple. So we've got one coming in from the Facebook. What is the minimum LTV for a refinance? I don't know if that's an easy question or not. And I'll let whoever wants to take it.
I can go ahead and answer that. So it just depends. If it's an FHA, the LTV it's score driven. So FICOs, again, like we mentioned a little bit earlier, are very important. So the higher the FICO score, the more the DTA can be expanded further. So if the FICO score is on the lower end, well, we're going to limit that, or a lender will limit that to 45, no further than 45. If you're talking about a 680, 740, 760, I've seen it going up to 55% DTI. So it just depends on the FICO score, credit history.
Awesome. Okay, we've got another one. How difficult is it to qualify seniors on a fixed income?
I'll take that one. So when they're on a fixed income, and that's a great question, I actually see that often. One thing that loan officers have the ability to do is, when it is non-taxable income, then we can actually do something called gross up their income. So give them credit for a little bit more than what they're actually receiving. So let's just use an easy example. Let's say they receive $1,000 a month. We can gross that up, usually on average about 15%, sometimes a little bit more. So that $1,000 now goes up to $1,150. So that gives a lot of more breathing room, as long as our applicant has been conservative with their debt. They don't have, I see it all. I've seen like zero debt, borrowers this week that earn great income. I've seen, buyers that are making $35,000 and they have like $1,000 car payment. I'm like, why? So just know that on non-taxable income, and it's not just Social Security, but it's disability, annuities, retirement income, Social Security, any of that income that is non-taxable, we can oftentimes gross it up or give them credit for a little bit more.
Awesome. Yes, this webinar. So will the webinar be available to view? Yes, we will post it on our YouTube, and we'll share that with everybody. You can also find it on the HMLO Facebook page. It'll be on there as a live stream, so you can go watch it there. So there's going to be different areas to go see it. Another question: as a lender, do you offer down payment assistance?
You want to answer that, Elizabeth?
Yeah, I can go ahead and answer that. So yes, as a lender, we do offer down payment assistance. Like I said, it just depends on the type of down payment that you're looking for. There are plenty of programs available depending on what you're looking for, from 3% down payment up to 7%. So it just depends on the type of liabilities that you have reported on your credit report. Depends on the FICO score. Yeah, there's plenty of programs. So yes, down payment assistance is available. So if like I said, if you have borrowers, or if you're looking to purchase a home, visit with a loan officer. Start getting ready. takes no time for someone to look at your credit and advise to you how you should go about getting prepared for that purchase.
All right, we've got to go ahead. Sorry.
Oh, and just as I mentioned earlier, if you're jumping in later, we are committed to, we're a nonprofit organization and we do have paying members. Again, we're not here to promote ourselves as loan officers and realtors. So I commit to making sure to put all of our paid members in a Google Sheet and uploading that or posting that on our social media, and then also updating that to our website.
Okay. Yeah. So that I saw a question from Mario. Was that, yeah? Can you share the information? I think that's going to be a great resource to have. So we have a great, interesting scenario here, and I'm actually kind of curious about this myself. College students, first-time buyers, advice steps to get them in the right direction. Anything out there for recent graduates?
I can take that if it's okay. So if you're a recent graduate, we can take the school transcripts in lieu of the 2-year employment history. So if you just graduated, you've gotten an offer and you have an offer, so you have a job coming up, we can take your school transcripts in lieu of your 2-year history, working history. So it'll be the transcripts plus your offer letter and you're ready to go.
Perfect, perfect. Any kind of tips or tricks to get them going in the right direction? Anything they should avoid coming out of college?
Well, like I said, they need to visit with a loan officer so they can look at their student debt, because I'm sure most of them are going to have student loans pending. So they need to look at the deferment time. They need to see if the student loans are on a fixed rate, or just prepare to look at DTI, see how much they can qualify for, understand what the monthly payment entitles, and just get information.
Are there any programs for certain majors? I'm guessing college degrees, like specific college degrees.
First responders, Veronica.
There are programs very specific to if you're a first responder, if you're a teacher, if you're a veteran. The best thing to do, of course, is to talk to a loan officer. But yes, there are programs very specific to if you're fresh out of nursing school, if you're a doctor and you just finished if you're finishing up your residency. So yes, there are very industry specific programs and loans out there, just depending on the industry that you're in. Yep.
Okay.
And with that, let's go ahead and transition back to Josie. Those are great questions. We're definitely available to be here as a resource. We do want to respect everyone's time. So thank you so much, Jose, for communicating those questions. Those are great questions. Thank you.
Thank you all. You guys did such a great job. I've taken away a couple of nuggets with the scenarios and the school teachers and the firefighters and the down payment assistance programs. Just in closing, I did want to let you guys know about HMLO membership. Our membership is $49 a year. We do things like this. We bring information, whether it be through social media. We have when we can get to it after COVID-19, we have in-person member-only meetings. One of the things that one of our board members, Maria Bonilla, just pointed out to me, she would love to do an intimate class for real estate agents that would like to learn how to be great at the down payment assistance programs and what to know. So Maria, thank you so much for offering that. Yes. We also have, yes, thank you. We also have a couple of other things that will be going after. One of them is we want to go out to these homes, these builders that offer the down payment assistance programs, so that we can feature them as well, so that we can bring that to our audience. We'll be doing those types of things as well. We do have a first-time home buyers seminar that's coming up on May the 14th on social media. So if you have someone that is looking to buy a home that wants to know about lending, down payment assistance, we'll have insurance specialists. We will have a team there to educate them. Once again, we are only there to educate them. Okay, we would love for you to invite them. They're at home on Zoom with their kids for school. Let's get them at a first-time homebuyer seminar on Zoom. And last but not least, we did have a Cinco de Mayo home buyer fair that we had to reschedule, but we're looking forward to the date, which is of right now. We've moved it to September the 19th. You will find more information on our website. We will also be coming to you live with more information there. We cannot thank you enough for being with us today. And please have your first-time homebuyers join us next week on May the 14th. Thank you all so much for all the wonderful information.
All right. Thanks, guys. And yeah, we'll catch you on the next one. All right.
Awesome.
Thanks.
Thank you.
Thank you.